Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for December 5th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, you can see last week we had a very narrow range right here, and I mentioned the first breakout could be a false move, and that could actually lead to a move in the opposite direction. And I mentioned that a push would likely come between 85 and 78, but if price did push into that area, look for bulls to defend and perhaps attempt to squeeze. So we've nailed the short-term rotation down off of the failed new high right into our target zone, and then bulls were able to climb back on board and reverse the trend back up right now short-term. So at the moment, that's kind of the range, 2178, 79 up to 85. That's support. Up here near 2212, 2214, that's resistance, and we could continue to oscillate back and forth, developing an expanding range. We could reject, as we are right now, the midpoint of the rejection day last week, which would in turn lead to more weakness across the range. 2185 is a significant key level. That's prior resistance, which is now attempting to become support. So that's generally the area, 2185 to 2180, that if bulls can continue to hold prices above that zone, we could see further strength toward 2240. Failure to hold 80 to 85 opens up a move across the range back toward lower value, which is 2120 and as low as 2070 to 2079. All right, so that's the kind of the swing and position outlook here. If we drop into the intraday time frame for a moment, one thing you'll notice here is that price has been in an upward trend this morning after bouncing off the 78, 79s. That's what was important. 78, 79. 78 was the previous week's low, so 2 weeks ago low. And that's where price came into that low, rejected, bounced back up. Here's the higher low, and squeezed through the previous session's close price. That's also the previous week's close. In squeezing through it, it came back, held a support, and is now held and rallied. So you can kind of see the path that the price has taken to get where we are. I would say at the moment, again, we're at the midpoint of the rejection day from last week, and that right there tends to imply that this is resistance. So as you can see, when offered, here's rejection, rejection again. 2206 is resistance at the moment, and if there's any failure to get established acceptance above 2206, we could see a move all the way back down toward the lows of the range. So this is going to be very important to see how it plays out. I would say watch 2206 for fade opportunities. Any push through it squeezes to new highs. All right, let's take a look at crude oil. Crude oil has been quite bullish here lately, rallying from below 43s, as you recall. We found the rejection signature, and that implied that we could see a move back toward 48. That was our initial idea. And if you look here, you can see here's the rejection day below 43s. I mentioned at that point that we could see a slingshot move back toward 48s. Price actually got into 49s and then pulled back, formed a higher low off of 45s. This is where the absorption signature occurred. That pattern occurred for the greater part of the day and then got a major squeeze that came afterwards. So major absorption off 45s, rallied this thing right into 52s, which is the top of the range. That's the range we've been trading, as you recall. 43 to 52. When we were at 52, I mentioned this could be rejection that brings us back across the range. If we come down here, look to come back toward 48s, and then right here we were saying, okay, now that could be a shot higher into 52s. So we've moved really, really well within this trading range and the price distribution. The only thing that's left is to see expansion. Otherwise, if price fails to see expansion beyond 52.12, 52.20, 52s in general, then we could be looking at a move again back toward value, 46.69, and back across the range, because this is the trading range right now. That's the larger range. That's the shorter range where we've been playing off of recently. And if there's any rejection, we come back down. Now, if price is going to push through 52s and hold, there is clear air at least to 56, 57, with a shot to go across the range into 62, 63, at which point we likely come back and form the new distribution. I've mentioned it for a while now. Until we're ready to see that, we're likely going to continue to fade off of 52. So right now it's going to be very important to watch 52 intraday. At the moment, prices above that level are being rejected. Let's take a look at the intraday time frame. On an intraday basis, what you'll see right here, again, watch 52, it's a key level on the chart. And you can see so far, here's 52, price kind of grinded through that level, pushed higher. Here's a higher high, rejection. Price came back below these lows, made it resistance, and then now you can see it's just chopping. So it's having trouble finding acceptance above 52s. It's having trouble pushing to new highs at the moment. So this is going to be a zone to watch. We could continue to build out a balanced profile around 52s. That would suggest acceptance, but at some point you got to see a push to the upside. So at the moment, look to fade the previous close on a new low back up toward value. If price comes up to a high here, while we are in an uptrend, it could be a short-term fading opportunity back down. So at the moment, you got to keep an eye on 52s. That could have higher time frame implications. Short-term, look to fade back to value on any move outside of this range. All right, let's take a look here at gold futures. Here's a look at gold. Gold has been one that you have to be careful with here lately. Again, as I've mentioned, there's been many buying signatures here, or absorption signatures, but price has not been able to push higher. Absorption signature with a failure, another one with a failure. We didn't really call these out. We said, hey, this is what's happening, but let's not trust it. This is the first one we trusted. For 2 days it held, but we knew that if it couldn't hold 1180s, it was done. As soon as you fail to hold the midpoint of this range, that trade's pretty much done, you can see. So again, this has been where bulls has continued to come into these situations. They've only been used as fuel for lower price discovery. So we have to be very careful with gold right now. It continues to trend lower. Any push back above 1200 will begin to perhaps move this thing back toward value, but at the moment it's just not happening. You have to watch for that, and until that happens, we could continue to build out at these lows or see lower price discovery. Here's the NQ. This is the higher time frame. This one is the one that paid really well last week. We had the idea that a rejection at 48.80 would likely return price back downward. We had several targets along the way to hit, and every single one has been reached except for the very last one here at 46.90. That was about the lowest one where I mentioned you could get to, but all the safe targets were hit. And there could still be more weakness ahead. Remember, the narrow range here, if you push to the upside outside of a narrow range, watch for a rejection, because that could lead to a break in the opposite direction. That's from experience, because every time we had a narrow range this way and it started to break up, I'd be the one getting long and I'd be the one left holding the bag sometimes, right? So instead, after doing that for a while, it's like, hey, let's watch for the rejection and instead be the trappers that are going to force the action this way. That's early in the career, you're getting trapped. As a pro, you learn to become the folks that are trapping. So you get up here, you get short, and you bring it back to value. That was a great play last week. Now we are near the lower end of the range, but not quite the bottom of the range. We have an expanding range here, an expanding range across the highs. At the moment, we're trading in the middle chop. So this is where everybody wants to trade. But the real rejection won't come probably until we get down here for a move up, or up here to get a move back down. So at the moment, we're just chopping in this range. So it could be back and forth. I believe that since price broke down from these highs, this pullback could be a selling opportunity for another leg down. So I'll be watching for signs of rejection on this pullback for a swing potential downward. Okay, let's take a look at the intraday time frame. Here's the intraday time frame. What you'll see here again, price is mostly in a range, and now we're in a range within the range, right? So here's the larger range, and when you trade a range, at times you're looking to fade new highs, fade new lows, right? We just got to new highs within this range, and now it's starting to reject. That could be an opportunity to fade it right back down toward 47s. You also see a very clear 5-day LVN at 47.80. So 47.80 clearly resistance. If price comes into that area again, bears could be looking to fade it. And right now, this is the range, so just keep that in mind. Any acceptance beyond 47.80 opens the door to a move back across the range back toward 48.40 and perhaps beyond. So right now, this is an important pivot to continue to watch intraday. Again, the fact that we're rejecting these prices at least on first blush here, could open up a farther pullback here toward value. Overall, we're still in the trading range, so fading edges could still be a tactic to use on either side. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck and trade well.